Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Raw land investment, a beginner's guide to buying and profiting from undeveloped property. Raw land investment isn't your typical real estate play. Unlike renting out houses or flipping condos, buying undeveloped property skips the headaches of tenants, repairs, and noisy neighbors. Yet it offers serious perks, from long-term appreciation to lower taxes, that have more investors taking notice. What makes raw land stand out? It's simple. Scarcity. They aren't making more of it. Whether you're eyeing farmland, timberland, or future development sites, the right plot can deliver steady value with minimal upkeep. No need to chase market trends or wait for permits. Just own and hold. If you're curious how to spot undervalued land or turn empty acres into profit, you're in the right place. Let's break it down. Understanding raw land investment. Raw land investment means buying undeveloped property with no buildings, utilities, or major improvements. Unlike developed land, think shopping centers or subdivided lots, raw land is a blank slate. It's cheaper upfront, taxes are lower, and you won't deal with leaky roofs or zoning headaches. But it's not just dirt. The right parcel can grow in value quietly while you wait for the right opportunity. Types of raw land to consider. Not all land is created equal. Each type has unique upsides and risks. Farmland. Crops or livestock can generate income while the land appreciates. Demand for food keeps it stable, but weather and falling commodity prices add risk. Timberland. Trees grow slowly whether you watch them or not. Selling timber brings cash flow, but wildfires and disease can wipe out decades of growth. Waterfront properties. Lakes, rivers, or oceanfront plots are rare and desirable. Prices climb fast, but erosion laws and environmental rules can limit what you build. Desert land. Cheap to buy, but water access and extreme temps make development tough. Best for long-term investors betting on future demand. Why investors choose raw land? Raw land isn't flashy, but that's the point. Here's why it fits certain portfolios. Low maintenance. No renters, no broken pipes, no midnight emergency calls. Minimal taxes. Empty land often costs less to hold than a house or commercial building. Appreciation potential. As cities expand or resources grow scarce, well-located land grows more valuable. Control. Hold it, lease it, or develop it later. You're not locked into one strategy. For investors who hate hustling, raw land is a set-it-and-forget-it asset. Just pick the right spot, and time does the rest. Factors to evaluate before investing. Raw land might look like endless opportunity, but not every acre is a winner. The key to smart investing? Look beyond the price tag. Here are the non-negotiables you must check before signing any deal. Location and future development potential. Location isn't just about views, it's about what's coming next. A plot near a growing city or planned highway will jump in value faster than one in the middle of nowhere. Check for urban sprawl. Land on the edge of expanding towns often gets scooped up for homes or businesses. Infrastructure projects. New roads, utilities, or transit lines can turn worthless dirt into gold overnight. Zoning changes. Local governments might reclassify rural land for commercial use, doubling its price. But beware. If an area's population is shrinking or jobs are leaving, even cheap land can sit unsold for decades. Zoning restrictions and land use. Zoning laws dictate what you can and can't do with your land. Want to build a cabin or split the lot? Check the rules first. Common zoning categories include agricultural, farms or ranches only, no subdivisions without approval, residential, Single-family homes or apartments, depending on density rules. Commercial. Stores, offices, or industrial use, often noisy but lucrative. Skip this step and you might buy land that's useless for your goals. A quick call to the local planning office can save years of headaches. Access to utilities and infrastructure. No roads, no water, no electricity? Then no buyers, unless they're as patient as you. Land without utilities costs less upfront, but takes longer to sell or develop. Consider road access. Landlocked parcels require easements from neighbors, which can get messy. Water sources. Wells or city hookups add value. Dry land means hauling water or drilling deep. Power lines. Off-grid sounds romantic until you're paying $20,000 to run a line. If you're holding land long-term, these might not matter. But if you plan to sell or build soon, utilities make all the difference. Financing and costs of raw land. Raw land doesn't come with a mortgage pre-approval process or a shiny sales brochure. Financing and costs work differently here, often catching new investors off guard. Unlike buying a house, lenders see raw land as riskier, which means higher interest rates or stricter terms. And that's just the purchase price. Taxes, surveys, and environmental checks quietly add up while you own the land. Let's break down how to pay for raw land and the hidden costs that can sneak up on you. How to finance raw land purchases. Traditional mortgages don't usually cover raw land. Lenders worry about resale value if you default, so they tighten the rules. Here are the most common financing options. Traditional land loans. Offered by banks and credit unions, these typically require 20 to 50% down and higher interest rates. Terms are shorter, 5 to 15 years, with a balloon payment often due at the end. Owner financing. The seller acts as the bank. You negotiate terms directly, like a 10% down payment with monthly installments over 5 years. Less red tape, but interest rates can hit 8 to 12%. Land contracts. You take possession but don't own the land until the last payment. Risky if the seller runs into legal trouble, but flexible for buyers with weaker credit. Biggest hurdles? Few lenders offer raw land loans, and those that do want strong credit and proof the land has utility access. If you're eyeing remote plots, cash might be your only option. Additional costs to budget for. The sale price is just the start. Owning raw land comes with ongoing expenses that eat into returns if you're not prepared. Property taxes. Usually low, but they're unavoidable. Check rates before buying. Some rural areas hike taxes if land gets rezoned. Surveying. A boundary survey stops disputes with neighbors. Worth every penny if the seller's map is vague. Environmental assessments. Wetlands, soil quality, or endangered species can kill development plans. Phase 1 assessments uncover these problems. Road and utility access. Adding a gravel driveway or drilling a well turns useless land into something sellable. Holding costs. Think liability insurance and basic maintenance. Neglect these and resale gets harder. Planning to subdivide or build later. Double those estimates. Permits, impact fees, and infrastructure can add tens of thousands before the first shovel hits dirt. That's it for part 1. Now you have a solid understanding of what raw land investment is all about. Stay tuned for part 2, where we'll cover key tips and strategies to help you make the right investment decisions. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.